Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at stevesaretsky.com. You can find him on Twitter at Steve Saretsky. Welcome back to the show, Steve.
Thanks for having me on.
Steve, the Saretsky Report, the June issue, has just been released. How can people get it?
Best way is just on my website, stevesaretsky.com. There's on the homepage there's an option to sign up for the monthly report there, totally free.
What's the latest on the Metro Vancouver housing market?
Yeah, so I think we're kind of transitioning where basically, if you look at housing over the past, really the last 12 months, it really has been sort of like a pandemic trade, right? I mean, you look at the stock market and you look at housing, housing has clearly been one of the pandemic winners, and obviously, a huge portion of that, or a huge reason behind that, is because people were locked into their homes. When you're spending, majority of your day, 90% of your day now stuck at home, obviously, you're probably inclined to want to upgrade your digs, whether that's, renovation or a bigger house, and, just relocating because you don't have to go to the office anymore. And so, we saw record home sales, obviously, across the nation, particularly here in Vancouver. March of, this year marked the single busiest month on record of any month. So, we had this crazy sort of pandemic-induced housing boom, and now we're sort of transitioning where, everybody's getting vaccinated, the government is loosening up restrictions, and, you're seeing people wanting to get out of the house. They're going on summer vacations here, and so we kind of have, I would call like the reopening trade, where you're seeing housing now is taking a backseat, right? It's not a priority that it was, say 6 months ago when people were still locked into their houses. And so it's going to be interesting to sort of see how things shape up here, because over the last 12 months, we've pulled a lot of demand forward. A lot of people that maybe wouldn't have bought decided to buy. And now, again, we're going through this reopening trade where I think people are desperate to get out of the house. And I think a lot of people will probably be back in the office as well come the fall. So there's a lot of moving pieces here, but the big picture here is that the housing market is slowing, I would say fairly significantly, at least from record levels back in March. And so, the trajectory for the housing market we've seen has the prices have sort of stabilized, and, we're sort of consolidating right now.
Well, you're in the top 1% of realtors. Should we be congratulating you and sending some champagne?
Definitely not. I don't know. Yeah, it's been I suppose a labor of love, a lot of hard work, but try to look at my real estate business as more of an advisory service, advisory approach. I think people are making the largest investment of their lives, right? I mean, $1 million here in Vancouver is nothing to sniff at, and I look at it like, well, how do we advise someone here to make a proper $1 million decision? And so we try to look at it from an advisory approach, using a lot of data, obviously, and just sort of understand the client's needs.
Are you thinking about moving to Calgary? And if you are, why?
Yeah, that kind of blew up there on Twitter. It was more of just like a loose thought experiment, to be honest. It's not a high probability event, but it's always entertaining, to think about, the cashing out of the Vancouver lottery, so to speak, and going somewhere where there's, you can buy a house for half the cost, and that was just kind of the idea behind it. Was, you look at, I always find it funny, right? You look at people here in Vancouver, particularly a lot of the old, the boomers that are downsizing, they're sitting on this sort of lotto ticket of a $3 million house on the west side, but the only way to realize that gain is to cash out of the market, and so you see a lot of them go to, Vancouver Island, for example. So, when house prices go up as they do, I mean, it's your primary residence. Really, the only benefit is you have to realize that gain at some point. So, we were just kind of toying with the idea. It's just, I think it's I'm quite bullish on that city. I think that the cost of living there is insanely low, particularly when you look across Canada and see that almost every major metro market is very unaffordable. And I think the quality of life there is intriguing.
Does the real estate market look like it's put in a major top, and it did it earlier this year?
I mean, it feels like it did in March, right? I think we had some pretty crazy prices being thrown around. You had record home sales, and I think over 50% of listings are going over the asking price. So, we definitely had that element of FOMO. Inventory collapsed to record lows. And, here we are today. Again, like I said, sales have decelerated. But the thing is, too, is that we've also seen new listings have also really shrunk this summer. So again, it feels like the sellers are also on vacation or just, not thinking about the real estate market. To be honest, you got a lot of realtors that over the last 12 months, right? I mean, we've probably been one of the busiest professions in Canada. And I think every realtor now is just kind of relieved and is going on vacation, is taking some time off because it has been 7 days a week for the last 12 months. So, I just feel like the real estate market in general is cooling off. What's going to matter here is, okay, if demand remains slower than it used to be, what happens with new listings? Right now, we're not seeing an uptick in new listings. In fact, you're seeing, months of inventory still below 3, which is indicative still of a seller's market. So it's not like you've got a sudden wave of too much supply. We're coming off record low inventories. You need to look on a national level. Inventory across Canada, nationwide, is at the lowest that we've ever seen in 20 years. So it's going to take some time to get the inventory levels back to even a balanced market. And so I'm not really seeing any sort of imminent price correction here, in the next couple months. Like it's going to take some time, but we have taken the FOMO and the froth out of the market.
In the real estate cycle, when do properties sell significantly over asking price?
Well, usually when you have a supply crunch, right? I mean, if you get months of inventory below 2.5 here in Vancouver, you're going to have pretty aggressive, multiple offer situations. As you get to 3 and above, things start to sort of stabilize. And then really when you're looking for like a buyer's market, you need months of inventory over 4, but over 4 for a sustained period of time. So, you can't have months of inventory hit 4 for a month or 2 and then go back down to 3.5. Like it's got to go to 4 and it's got to hover around 4 to 4.5 for, 4 or 5 months until sellers start, capitulating and cutting their prices. So, I think it's important to understand that, real estate is a very slow moving, illiquid asset. It doesn't move like the stock market does. These things take time. Sellers are emotional. If you're selling your primary residence and you've lived there for 20 years, like there's an emotional element to that. Everybody always believes their house is worth more than it really is. It's your house. You've lived there for 20 years. You've put, love and attention to detail in it. So the last thing you're going to do is cut your price because it hasn't sold in 2 weeks. Like people tend to sit on prices for a lot longer than they really should.
Is fear of missing out still playing a role in the real estate market?
I would say not anymore. We've really seen that come off. Like we're still seeing multiple offers. I mean, like you still got elements of the housing market that are really tight. And if you look at the townhouse market here, like you still got a sales to actives ratio of 53%. Anything above 20% is considered a seller's market. So you're at 53%. That's a really high metric. Like at 53%, you're still going to be expecting to be competing on a lot of these townhouses, for example, right? So, the element of like, oh my gosh, if I don't buy this month, I might get priced out. Like that sentiment, in my opinion, is no longer there, because we're seeing a stabilization in prices. So, I mean, that's definitely encouraging, right? We've had unsustainable increases in price growth over the last 12 months. So to see that sort of dissipate, I think is a welcoming, for everybody.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Steve Saretsky. Steve, as the economy reopens following the COVID scare, what are we likely to see happening in the real estate market?
Yeah, I think that's a tough one to answer. A lot of it's just going to depend on, so everybody's looking for sort of like the crystal ball, what's going to happen. And I think if we go back, at the start of the pandemic in March of really last year, if you had asked anyone at that time in March or April of last year, where's the housing market going to be in 12 months? I don't recall seeing anybody out there that said, hey, you know what? We're going to have record home sales and we're going to have record home price acceleration. Nobody had that on their forecast. So to try to sit here and say, hey, listen, this is what's going to happen. I'll be the first to admit, as someone that's, boots on the ground every day, that's sitting with, an enormous amount of data that I'm analyzing on every single day basis. To get a clear understanding that it's impossible. And the reason being is a lot of it is out of our control. I mean, how are we going to have, our government's going to lock us down again if cases start to spike in the fall? Have we really put this thing behind us? I sure hope we have. How many people are going to be actually going back to the office? I mean, they're going to slowly phase that in. I think the big kicker here is realistically what drives financial markets, central banks. What does central bank policy look like? I mean, are we going to continue, down this path of seemingly unlimited QE and easy monetary policy of low interest rates for the next 2 or 3 years? How does that look? And so I think a lot of that is going to depend on the direction of the housing market. I know the Bank of Canada's got an update on their monetary policy on July 14th. It's expected they're going to do some tapering on the QE side, but again, they're still very aggressive, and there's a lot of liquidity. There's too much capital chasing too few assets today, and obviously that's why asset prices are, roofing all across the markets. But so that's kind of what I'm looking at. I would say right now, what I can say in the next 2 to 3 months, I think you're going to see a consolidation. You're seeing a slowdown. You're seeing inventories slowly recoup after hitting record lows. And so I think that you're going to enter this consolidation phase for the next 2 to 3 months where the market tries to figure that out. Buyers are taking a little bit of a pause, which again, I think is healthy. And so, yeah, the outcome after that is really going to depend on a lot of these variables that are yet to be determined.
We'll have more with Steve Saretsky right after the break.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, in a recent interview, President Trump alluded to interest rates heading towards 21% again, shades of the 70s. Could interest rates spike higher than we think, faster than we think?
I mean, I'm personally not in that camp, but I understand there's a lot of hyperinflationist people out there that are certainly concerned or paranoid, I should say. But I look at it and say you've got global debt to GDP at 355%. The last time we tried to hike interest rates in 2018, we didn't get very far before the market sold off. Stock market sold off 20%. And the Fed came in and, not only cut interest rates, but then started up QE, to basically bail out, assets and keep the system going. So, I look at it today and say, well, how much more debt have we tacked on since 2018? I mean, I think that over the last 12 months alone, it's been staggering, the levels of debt that we've added. So to think that you can actually have an economy or a financial market that can actually stomach, even 100 or 200 basis point increase in interest rates, in my opinion, is not going to happen. I think that you're in a lower for longer period. Because realistically, what's going to happen? Okay, so let's say they hike rates 100 basis points. I mean, realistically, your asset classes are all going to sell off. So once they start selling off, that unleashes a wave of deflation. So yeah, I don't personally see that view.
Is the central bank tapering, and what could that mean for real estate?
Yeah, we're going to get an announcement on July 14th, like I mentioned. But they've tapered from $5 billion to $4 billion to $3 billion, but realistically, that $3 billion per week, coincides with basically the federal government's, deficit spending. So, basically we're in a situation right now where since, 2019, the Bank of Canada has essentially funded about 90% of the government bond market here. So, I don't see that going away anytime soon. We talk about this massive deficit spending and, how it's going to be financed, right? Like, these numbers and these budget deficits are all predicated on low borrowing costs, which are ultimately going to be, supported by the Bank of Canada. Now, you can agree with that or disagree with that because you think it's morally wrong. I'm not here to sort of debate the morals. I'm here to tell you what is happening in the markets, and that's going to be the outcome. So that's kind of how I see things. I don't see the central banks going anywhere anytime soon. What's the latest on bank lending? Yeah, you had residential mortgage credit growth, which is the metric that I follow. That was running at 10-year highs. As the most recent reading is in April, so a couple months behind here. But you've got residential mortgage credit growth running at 10-year highs. So that kind of alludes to the strength of the housing market, the willingness of banks to issue credit, at least on the mortgage side. And we've actually seen consumer credit growth, for like credit cards, for example, have actually been declining throughout the pandemic. So basically, people maybe not necessarily borrowing to spend on other items, but certainly borrowing or at least consolidating into residential mortgages. A new head of the CMHC in a likely federal election in the fall. What could that mean for real estate borrowing? Well, we've seen the CMHC since Evan Siddall, who I actually liked. He left, earlier this year. So he's gone. He came in. He was very, sort of anti-housing market, anti-borrowing too much money. Came in, made a lot of changes at CMHC to basically get them somewhat less active in the housing market. And, now we've got this new CEO, and, I think that one of their first moves here has been that they've reversed course on the tightening of lending standards. So you'll remember at the onset of the pandemic last year, CMHC tightened lending standards, saying that they were concerned about the housing market and didn't want to encourage people to leverage up at this particular time. And so they started losing market share to the other private insurers. And so now with the new CEO, they are actually reversing. They're going back to the original lending standards pre-pandemic, to try to regain market share, basically, or stem the bleeding, so to speak. So, I think it's going to take a little bit of a different role here moving forward. I think CMHC is probably going to be a little bit more active than they were under Evan Siddall. What are foreign buyers, sellers, and owners doing now? Like I said, buyers just kind of taking some foot off the gas. Like, sales are still strong. But yeah, like a noticeable significant slowdown since the peaks in March. Sellers, we can see, particularly in the detached segment, you've got new listings, really weak. And so there doesn't seem to be a whole lot of people listing their houses right now. I mean, the condo listings are actually surprisingly still really strong. They're right along with last year's levels. And so that's allowing months of inventory to build. So you got sales, for example, slowing in the condo segment, but new listings keeping pace, which is allowing months of inventory to build. I mean, again, months of inventory for the condo market is still at 2.7. So you've got, again, still a tight condo market. But I think that the condo market, you've got a lot of new construction coming to completion, and in general, a lot more supply than we had, say, in 2016. And I think that the condo market, I think price growth is going to be relatively contained.
What are developers doing?
Yeah, they've been going strong. I mean, housing starts are robust. Pre-sales have been incredibly active. So we've actually seen a lot of, it's been a good time for developers, obviously, right? They've been launching new products. Absorption rates are really high. We're seeing quite frequently in townhouse developments, for example, those will sell out in a week. They'll sell out, say, 50% in the first week, then they'll raise their prices. And they'll sell out the remaining at even higher prices. So, that's been a strong segment. Low-rise wood frame condos have been a strong segment. The only sort of tough segment, right, has been high-rise concrete, particularly downtown, where you're starting to get into the luxury market, $1,800 plus a square foot. And there's just not a huge market for that product right now.
Could low mortgage rates keep the real estate party going?
I mean, I think it's certainly bullish for that segment. I mean, one of the ideas behind low rates and QE is per the central bank's own wording, is that it's designed to inflate asset prices. It's designed to push people into quote unquote alternative assets. And so what happens is when you essentially nationalize the bond market, right? So if your central bank space becomes one of the only buyers of government bonds because they yield, real return of -1 or -2%, you force a lot of, say, pension funds or institutional like money into the housing market. And so that's why we're seeing, if you look at it, you're seeing companies like BlackRock, you're seeing, there's on the news there in Toronto, big developer that's now going in, they're creating, basically funds where they're going in and buying, single family houses in the resale market. Well, why are they doing this? I mean, again, if these guys could get, say, 5% on a government bond, I can guarantee you they wouldn't be going in there and buying up housing stock. But when you nationalize the bond market, and you basically force them to seek out a higher return elsewhere, and so they're going into alternative asset classes such as housing. So, I think that's going to be a huge buyer moving forward is the institutionalization of residential real estate and, not just building new apartment buildings, but actually competing with other buyers in the resale market, which is a very slippery slope. I personally feel it's morally wrong, but again, this is kind of the environment that we have created. When you keep interest rates where they are, for the past decade plus, I mean, you're forcing capital to seek a return elsewhere.
Is the pushing of the climate change narrative having an effect on real estate?
I haven't heard anything about that. I don't follow it too closely, to be honest. I mean, I think it might be something to be cognizant of, obviously. I know that I have a couple clients here and there. They get a little bit weary of places like Richmond that's, technically below sea level. So, but yeah, I don't have any sort of additional insights into that segment.
Can people buy positive cash flow rental properties now?
Well, I mean, you can always make it cash flow. It's just a matter of how much you're putting it down, how much down payment you're putting. So I think you're having to see, obviously, increasing down payments. I mean, don't get me wrong, like, I can find you a condo downtown, 20% down, cash flow you $100 a month. But, the numbers are getting increasingly difficult. Obviously, you're like a 2% cap rate here in Vancouver. I mean, again, that's what I'm saying. You look at Calgary, for example, you're closer to a 5% cap. So a lot of that stuff's going to cash flow. It just depends where you go.
Are you a buyer or seller of real estate right now?
I think it depends. I mean, for me personally, I'm not doing anything. I've sort of got my positions, long-term plays, working on a redevelopment, in Calgary, actually. And, I mean, so for me personally, I'm not actually doing anything right now, but, for the average person, I would think, I still think that the market real estate is not an efficient market. I find that there's always opportunities, and there's always, pockets of overvaluation. So areas that I'd probably be a little bit more concerned about is, single family houses in the suburbs that have gone up 30%. I think there's an element of, I think those are prone to potential price corrections. I look at condos now, say in downtown Vancouver. I think that those are actually undervalued. They haven't seen any price appreciation over the last 12 months. In fact, I would say this, a 2-bedroom condo downtown is still probably down 10%. So, if you're betting on the reopening and the back to the office, play, I think that those are an undervalued segment of the market still. So, yeah, it just depends on where you go.
Is CERB continuing to have an effect on real estate?
I don't know if it's having an effect directly, but obviously it's just additional capital that's sloshing around the economy. I think that you look at money supply in Canada, I think it's up close to 18% year over year. So, when you expand your monetary base by 18%, it's not unrealistic to conclude that might be impacting, house prices, for example. More capital chasing a fixed amount of assets generally pushes the prices up, and I think that's what we've seen over the past 12 months.
The economy's opening up, and work from home could revert back to work in the office for some people. Will that have an effect on housing? Yeah,
so this is kind of like one of the earlier questions you were asking me about, what's the outlook for the market here moving forward, and it's like, well, I don't know. Again, this depends on what the offices do. Because will you get another wave of, say, quote unquote, shuffling of people moving around, whether that's in the rental market or the resale market? If people suddenly, relocated to, way out in the Fraser Valley, an hour out from the city, if they suddenly realize that they're required to go back into their office 5 days a week come September, do they stick it out in the suburbs, and if they do, for how long, or does that create some reshuffling back to the city and additional movement in the housing market? So, yeah, it's really hard to say. I personally think that there'll be a significant amount of people back in the offices come the fall.
There's a push on for Agenda 2030, the Great Reset, where you'll own nothing and be happy about it. Any thoughts on what that might mean for real estate?
I think that we have seen that home ownership rates in Canada peaked. I think they're going to continue to decline over the next 10 years. I think that we are becoming almost more European in nature, where you can clearly see the Canadian government's trying to push alternative methods of housing. So they're trying to push really purpose-built rentals. So purpose-built rental housing in Canada is at record highs in terms of new construction. CMHC is incentivizing developers with very attractable financing for purpose-built rental construction. And so I think that they're trying to create an alternative to steer people away from home ownership. They're trying to get them into the rental market. You've seen a lot of this wording from CMHC as well that, we need to stop glorifying home ownership. And so, yeah, I think that's kind of where we're going towards. I think we're going to more of a lot of people, particularly the younger generation, is going to be renting. And so, yeah, you're going to see, I think you'll still see a lot of the institutionalization of real estate, right? So you're going to be renting from companies like BlackRock. And, yeah, again, whether that's right or wrong is certainly up for debate, but I feel like that's where we're going. And, it's interesting to see for sure.
We're hearing about big corporations buying up homes. Could this be the start of a trend?
Yeah, I think it definitely is the start of the trend, right? So, yeah, we're seeing more and more companies. It's much more active in the U.S. right now, but, keep in mind the U.S. from a technology and just general societal point of view. The U.S. is always several years ahead of Canada. So any sort of technology or whatever that comes to the U.S., it usually doesn't come to Canada until 3, 4, 5 years later. So, we're seeing much more institutionalization of real estate in the U.S. But, it's slowly coming here to Canada, and I think that it'll probably continue to increase in the coming years, again, because I think that there is this hunt for yield, so to speak, and if you look at if you really weigh the options here for a company like BlackRock, for example, like, what would you do? Would you deploy $100 million in government bonds when they're yielding less than 1%, inflation's running at 3.5%, or would you plug it into residential real estate? Sure, the cap rates are low. Sure, the valuations are stretched, but at least you're getting a stable rent. You take some leverage on that at 2%. You lock in that fixed term debt, and you're paying off 60+% of your initial mortgage payment towards principal. Like, I mean, it's kind of a no-brainer for these institutions. And again, as I said before, if you have government bonds yielding 3-4%, I can guarantee you that BlackRock won't be very active in the housing market. But this is just the world that we're in today. So,
are a lot of homes in BC investment properties that are not occupied?
Not that I'm aware of. I don't have any particular data on that. But now that we've got speculation taxes and empty homes taxes here in the city of Vancouver, I don't have a very good read on that. I mean, obviously you've got cottage homes and vacation homes that are certainly used only part of the year. But don't have any information on that.
We've heard the phrase stagflationary debt crisis. It doesn't sound very good. Could it happen, and what would it be?
It's not really my view. I'm still more of the, I think that you could have bouts of inflation here for sure, but I think that the central banks, governments, everybody's levered up to the hilts here, and I think that they're going to basically come in with a form of yield curve control when they have to. I mean, they really are kind of already doing yield curve control without actually calling it that. What are they doing through QE? They're basically suppressing, yields, interest rates. And, it'll come a point where they'll have to physically come out and say, hey, we're going to, explicitly target this yield. We'll see how successful they are, but my base case is not stagflation.
Do you have a bullish case and a bearish case for real estate going forward?
I mean, the bullish case is obviously just a prolonged era of, I'll call it, financial repression, where you've got inflation, I would say, manipulated below what it really is. I mean, we look around today, you can see housing's running at record highs. That's a huge component of people's everyday expenses. The central banks are saying, hey, listen, inflation's running at 3%. It's probably much higher, especially in these major metro cities. And so I think that, in an era of financial repression where yields are basically pinned by, the authorities, and inflation is arguably running at, quote unquote 2%, but it's really higher. I think that's extremely bullish for the real estate market. And that's really what we've seen since 2012, when QE was really starting to get ramped up, and it was extremely bullish for real estate. That's probably the bullish case. The bearish case would be, really just inflation doesn't end up being transitory. It continues to increase. You get rampant wage acceleration. It forces maybe central banks' hands to start hiking interest rates. I think that would be certainly bearish. That's the bearish case.
Steve, once again, how can people get a hold of you?
Best bet's just by email at steve@stevesaretsky.com.
Steve, thank you so much for being on the show.
Yeah, thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor, and you just heard how to get a hold of him if you'd like to. If you have any questions for Steve, you can send them to info@housestreet.com, and we'll ask them on your behalf. Our YouTube channel is Talk Digital Network. Find us on Twitter @HousestReet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HousestReet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.